Good morning traders, Richard here doing a quick Ichimoku cloud chart market review of the S&P 500 index. We'll look at it from the SPDR ETF perspective, which is a exchange traded fund, mimic the S&P 500 index basically. In the last update we were looking at this resistance zone here at the bottom end of the cloud and highlighting that if we break through there, we'll be able to get through the top end of the cloud, and that's now this new resistance zone that we are testing, or the S&P 500 is trying to break past the top end cloud chart resistance there. Now, if we manage to have a sustained rally beyond this top end cloud chart resistance zone, the next major resistance level is the bottom end of the cloud there, that zone there, as well as the top end of the cloud. So these are the two upside resistance targets for this current rally. Is a range between 442, 443 and then 446, and then ultimately the top end of the cloud together with the old highs there. These are the upside resistance targets on the daily Ichimoku. So these are the upside targets. If we get a sustained rally past this resistance zone, it then activates these upside profit targets from this particular swing trade. If the resistance here holds, we could dip back into the cloud and retest the front end cloud for support, that zone there at 436. That little zone there, and then the front end of the cloud here. Now this is a major support zone at the top end of the cloud there, so that we can probably see for the year-end rally a further advance, testing these resistance levels and then come back to test support here, or in a weak market retest there and then continue the rally from there. Now we do need to, this is about almost a 10% or 7-8% rally. Now if we look at where would be a Fibonacci retracement of this move, 38% is roughly around about there. So that brings us back that that's the downside risk targets, these two front end cloud chart support levels. And then if we get a sustained rally past here, activates these other upside resistance targets or profit targets on the daily Ichimoku. Now turning to the 4-hour chart, you can see there how we got that fantastic rebound here end of October, rallied straight up, broke through the bottom end resistance zone, fighting for top end resistance, broke past that top end cloud chart resistance, and now we between this cloud chart resistance zone that's now going to become a support zone of 436 and the bottom end of the cloud there, that's now a new line in the sand, a very major resistance level for the S&P to get past. Between that 443.4 and 446, so those two levels there are the upside resistance targets together with the old high here at the top in the cloud there as the two upside resistance targets. Downside support targets on the 4-hour is this front end cloud chart support level at 431, and then the bottom on the cloud here at 420 roughly, and 423 is the bottom end cloud chart support level on the 4-hour Ichimoku. Now turning to the weekly Ichimoku cloud, this bull market's now a couple of weeks old since price action above the cloud is bullish, so we went into a bullish trend here in May this year, and now we came back to retest that support level, and now we had a strong rally from these support levels, and you can see that whole cluster of resistance that's waiting for this market rally. There's a possibility to dip back down to retest this front end cloud chart support zone at 431, so keep that in mind. But so far price action above the top end of the cloud is bullish. Price action above the top end of the cloud on the daily would be bullish if we get a sustained breakout past this level, and that would set us up for the further year-end rally. And then on the 4-hour chart, expecting some form of a consolidation if these resistance levels hold. Now, just from out of a point of interest, if we overlay the Fulgent AI engine that sits on the Metastock platform, we can see here we've had a couple of nice volatility trades here, and this recent move, the AI did capture that volatility trade quite nicely, and that's on the 3-hour Ichimoku chart. On the 4-hour, we also had a signal. It was a quick swing trade move. Let's refresh that. There we go, quick move there to the upside. And so you can see the AI is generating some really nice signals on the SPDR ETF. And if we look at the hourly trade, you can see we had that beautiful cloud cross there, and a quick move to the upside there as well. So the AI does capture some of the nice artificial intelligence trade signals. The other interesting point to note is that we've got a bit of a breakout of it, of that trend line breakout there. We're not there yet, but the Nasdaq, actually the triple Q, did break out past the trend line breakout. We do need to see a breakout past that. So it's critical for the S&P to start having a sustained rally above the top end of the cloud, as well as breaking past that trend line, and that will set us up nicely for a continuation of the year-end rally that started here in end of October. But it's not without consolidation. Do expect some form of a consolidation to retest the front end cloud chart support levels, but as long as price action is above this bottom end of the cloud, we should be okay. But keep an eye on that breakout of that trend line. It might give some extra opportunity to swing trade the market back up to the top end resistance levels there, but be aware that we've got downside risk to the front end cloud for key support. Until next time, happy cloud chart trading. Bye for now.